how to change your facts so you can lower your tax. You will also learn the principles of building wealth. The facts you must change to reduce your tax will at the same time increase your income. Start behaving like the wealthy, and soon you will become one of the wealthy for whom the tax law was written. Caution: beware of tax preparers who promise they can lower your taxes and who are really tax cheats, or who focus on postponing or deferring taxes to a later year. Real tax planning is permanent, so you never have to repay the taxes. So stop letting the IRS, the U.S. Internal Revenue Service, CRA, Canada Revenue Agency, HMRC, Her Majesty's Revenue and Customs, or other government agencies steal your money. Don't let them steal your time. It's time to get out of prison. As you learn the truth about taxes, the truth will set you free. You will have the time and the money that you want so that you can live your dream of financial freedom, comfort, and security. Chapter 1 Key Points. Become one of the wealthy and stop giving the IRS your time. Learn to trade your money for time and engage in activities the government uses to shape the economy. Remember, the tax law is a series of incentives for entrepreneurs and investors. Taxes are based on your facts and circumstances. Changing your facts will change your tax. Tax strategy number 1. Include tax planning in your wealth strategy. Too many people ignore taxes when investing and planning their wealth strategy. They look at the return on investment as the return before they pay taxes on their investment income. This makes no sense. With taxes as your biggest expense, wouldn't you want to look at every return and every investment after taxes? When you do, you may find that you are making a lot less on some investments than you thought and are making more on others in comparison. Let's take a couple of examples in the U.S. that we will go into in much greater detail later on in this book. First, let's look at real estate. Regularly, I hear on the news that real estate is only a moderately successful investment on average. And if you were to compare it directly to some other investment before tax and without leverage, i.e. debt, you would have to agree. Let's say you purchased a rental property for $500,000 with $100,000 of your own money and $400,000 of the bank's money. Suppose that the annual return on your investment of $100,000 is 7%. Then, let's suppose that you make a similar investment of $100,000 in the stock market that returns 10%. Which investment is a better return? It seems obvious that the stock market return of 10% is clearly better than the real estate return of 7%, right? Not so fast. The 10% return from the stock market will get you $10,000 before taxes. You will pay capital gains tax of about 20%, counting both federal and state taxes, leaving you with an after-tax return of $8,000. The 7% on the real estate investment will get you a before-tax return of $7,000. Due to the magic of depreciation, Chapter 7, you won't pay any tax on your $7,000. Still, $7,000 is less than your after-tax return of $8,000 in the stock market. So it seems you are still better off in the stock market. Only your real estate investment doesn't just give you tax-free cash flow. It actually reduces your taxes on your salary and or business income because while there is positive cash flow of $7,000, the depreciation deduction of about $27,000 gives you a tax deduction against your other income of $20,000. $27,000 less $7,000 to offset real estate income. That $20,000 additional deduction against your other income is worth $6,000 of reduced taxes on your other income in a typical 30% ordinary income tax bracket. So your real return from your real estate is $7,000 plus an additional $6,000 of tax refund on taxes you normally would have paid on your salary and business income for a total return of $13,000 or $5,000 more than your after-tax return from the stock investment. This is just one example of how the tax law can have a dramatic impact on your cash flow and your wealth. If you computed your return just by looking at the cash flow before taxes, your return of $10,000 on your stock investment is way better, $3,000 better, than your return from your real estate. After taxes, though, it is the opposite. Your return from the real estate after tax benefits is $13,000, while your return from the stock market after tax is only $8,000. See why you should always consider taxes when you make your investment plans? Chapter 2. Taxes are fun, easy, and understandable. Quote, "The hardest thing in the world to understand is income taxes." End quote. Albert Einstein. Death and taxes. Death and taxes. They're the two most dreaded words in the English language, or any language for that matter, and it's totally understandable. You don't want to die, and you'd probably rather die than pay taxes. Perhaps we link taxes with death because they represent the death of all for which we've worked. Or maybe it's because we don't understand taxes any more than we understand death. The reality is that taxes can kill your hopes and dreams. How? By stealing your wealth and diminishing your quality of life. That surprise vacation for your family? Gone, thanks to Uncle Sam. The improvements you need to make to your house? Kiss them goodbye come tax time. I'm sure you can relate. You're not the only one. Worldwide, the average person pays 30 to 50% or more of their hard-earned income in taxes, either through income, sales, value-added, payroll, estate, or property taxes. Think about that. Almost a third to one-half of the world's wealth is handed over to governments. That's bad news. But here's the good news. Taxes don't have to kill your dreams. In fact, 90% of entrepreneurs and investors can reduce their taxes simply by learning the basics of tax law. You might be saying, great, another book that helps entrepreneurs and investors. I'm just a regular Joe. What can I do to lower my taxes? To you I say, what if you became part of this privileged class of taxpayers? What if you took the right steps and made the right preparations to not only make more money, but to also pay less to the government in taxes? Sounds hard, right? Well, as you'll learn, it's not. And when you do take the step of becoming an entrepreneur or investor, you will easily pay 10 to 40% less in taxes by learning how the tax law can work for you instead of you working for the government and paying high taxes. Here's a tax tip. Invest where you travel. Do you have a favorite destination? Consider investing in the area. It gives you a great reason to keep returning, and you turn the travel expenses you already have into deductible expenses, keeping more money in your pocket.
See, Stephanie,
anyone can understand
that's why
taxes.
we should buy in Vegas.
This might make you laugh, but I absolutely